Welcome to
Hi.
the next session. Hi, Magda. We're going to start our eighth session of my series 20 for 20 in 2020. So, for those of you that are not familiar with that, I'm going to be interviewing 20 professionals that you may wish to choose to help you with some of the important decisions in your lives. They will include accountants, attorneys, financial advisors, and other professionals that you may be looking to be part of your decision-making process. And I'm Ella Newman. I'm a trusted insurance advisor that helps people find effective solutions to their estate planning, business succession planning, retirement, and long term care planning, and other insurance concerns that they might have. And I do that through my work at the Norton Advisory Group. And today we have an opportunity to meet with Magda Szabo, who is a CPA and an attorney, and who has a wonderful practice where she gets involved with a lot of interesting tax considerations and other accounting matters and works with both domestic and international clients. And we're going to learn more about her practice, and how she approaches working with clients and how she got to where she is. So with that, I know we've been through some rough times and we just finished another tax season, Magda. I'm sure you're happy to have October 15th behind you. And I imagine that's been even more challenging with this pandemic. How have you found that?
Yeah, I think more got bunched up toward September and July than before, because before you would have April and then you would have that push. But now, it was kind of a delayed reaction. I just found it was a little more frenzied and frantic around 9:15 and then 10:15. So yeah.
Yes, I can imagine. So now, as I promised, we're going to start our session with the 20 questions. And my first question for you is, what is the primary focus of your practice?
The primary focus of my practice is advisory and reporting. I think, but the two go hand in hand. So I take a client's situation, and I look for, review their previous returns. I look for the kind of business they're in, where they're located, all the facts and circumstances that surround their business activity, and I look to see whether there are any tax opportunities that they can avail themselves of. Sometimes it's through something as simple as an election. Sometimes you'll find, that there's a huge savings in creating qualified compensation plans in the right situation. I think people are very dismissive, for example, of defined benefit plans when I think, especially in the closely held business area, you can find tremendous savings there. I look to insurance products. I look to their trust and estate planning. I look overall at the entire picture and seek to avail themselves of the best planning opportunities that are out there. If we need to look to structure, if we need to do elections, that's all on the table. Ultimately, the client drives the decisions, but I bring all their choices to the table so they can make their choices within what they feel comfortable doing at the time and in that particular year.
Well, that sounds like it's very comprehensive. And yeah, I totally understand what you're saying. And we get involved with some of those areas, of course, as well. And things like even disability insurance for clients, and even looking at their 401ks to see if they're in the right program. And these sound like all areas that you get involved in. And that's so crucial to your
Yeah,
clients.
and insurance too. I mean, something as simple as,
Right.
I have a U.S. subsidiary of a U.K. company, and discovered that apparently the U.S. executives weren't covered by
Interesting.
insurance.
Interesting. Okay. That's not a good situation, right?
No, we've taken care of that, but when you go through and you don't see the expenses you expect to find, which
Uh-huh.
is why I think, as having a relationship with clients as an accountant, you're going to find more things because it's a much more detailed relationship than just, having some broad-based questions that you might go to for a certain specific transaction that you may have in mind. I look at everything.
That sounds very important and effective. So what led you to this particular career and this combination of skills? And what are some of the credentials that you brought to the table now?
So, I mean, academically, I have a number of degrees. I have a master's degree in accounting. I have a law degree. I have a Master of Laws in taxation. And I also have an APC in international tax from NYU School of Law. My dad was a college professor, so I suppose academics always did attract me. But what I find interesting about taxes is the jigsaw puzzle piece, the jigsaw puzzles that you need to assemble to, bring together a really good solution for clients. And so much of our tax code is really jigsaw puzzles. It's not, you can't infer, it's not intuitive. If you try to apply logic, it's not necessarily going to prevail. It's components that you need to assemble. It's complex, but you have to assemble the components, and you assemble the components, you do have a good finished product. I think intellectually, that's what interests me the most, but also it's a very people kind of profession. And I'm mother of 4 children. I enjoy working with people. I enjoy bringing value to people and helping them.
Well, that's a great approach, and then it makes it very understanding how you got to where you are. And how did you decide to get to your current state, the way your current firm that you've been with? We've been with other firms, and how did you wind up in this situation right now?
Yeah, I mean, I like the autonomy I currently have. I can set rates for clients. I mean, at reasonable numbers. I'm not burdened by the overhead of and so many other employees. And the larger you go, there's more overhead that you're paying for, and your clients are paying for it. We are lean, and we do not have unnecessary costs. That's our approach.
That makes sense. Okay. What would you say some of the highlights of your career experience have been over the years?
Well, I think I've had to sort of juggle sometimes, because I had 4 children. There was a period of time that I was actually even just home full time with them because they're very, very close in age together. So when they were very young, I actually did take a hiatus, and I was home with them. And I was a soccer mom. But in terms of my profession, it's something I've always enjoyed. And clearly, when my youngest started school, I went back, and I've been back full time, ever since. I've practiced law, and I've practiced accounting, so I've had my foot in both doors. I think I probably think more like an attorney. I think that just comes second nature to me when I read the tax code, when I analyze tax provisions, when I write. When I advise. I think I actually do probably think along those within that framework, but I'm an accountant, and I like that because I like to see the nuts and bolts, and I like to be very comprehensive when I look at particular client situations. So I think I'm a combination of the two. I have a background in both places, but clearly it's the accounting side that has kind of come to the forefront. And because I feel that there's the greatest value that I could bring in that space.
Type of clients do you tend to work with most?
I will work with, I would put it in the overall category of businesses that are privately held and their owners. So it could be domestic individual, heavily in real estate. I have clients in that space, domestic individuals with business enterprises in the United States. I would say probably at least half to 60% of my work is in the international space. So I deal with both inbound and outbound situations where I maximize opportunities. For example, and also, avoid traps for the unwary. So, the perspective that our tax code has, the views that our tax code has on entities, for example, very different in other countries. If you, simple example, you form a limited liability company in the United States, everyone thinks of that as a no-brainer. You want limited liability protection, you're going to form an LLC. Well, you do that with Canada or the UK, well, you're going to have very disparate treatment. You're not necessarily going to have the same view. Canada's going to view it as an opaque entity, as a corporate entity. Similarly, by default, there's one anomalous decision to the contrary, the Anson decision, but UK will similarly view it differently. So, you try to structure, even when you're doing domestic work, something that fully aligns with, how this will work for the taxpayers involved. How does this, and so I will do something like I'll often create, my default will be a limited partnership for those countries, because I know both of those countries will view it as a partnership. I could even, for example, in the UK side, flip and do a limited partnership with a check the box election. So the limited partnership is technically viewed as a corporation in the US, but if it's held, for example, by a foreign limited, I will have a complete pass through of losses and credits, tax credits. Our rates are generally higher, and to fully offset. So certain things work very well in certain situations. Another example, for example, that I can is very simple, but Germany. Everyone thinks no problem putting using a corporation or corporate type entity to put personal real estate, personal use real estate in it. People do it throughout the world. It's very common. They might wrap it inside of a trust, but it's very common to see an opaque entity, a corporate type entity, holding personal use real estate. Well, Germany will imply that a business use. They will imply a dividend. So that's not going to work because of that fact and circumstance. So it's all very fact specific that you do for people. You have to look at cohesively, where they are. In the U.S., it might be something as simple as, you had to be an accrual basis. For example, with 17 Tax Act expanded the ceiling that you could retain cash. I had one client where we generated a $4 million, net operating loss because of that change in the law. So it could be simple things but they could translate into a lot of money. You're not necessarily going to catch that unless you're within the nuts and bolts of looking at things. Or you could advise clients, how do you track your inventory? Do we need to necessarily treat it as inventory? Where do we break out the line between supplies? Can we treat this as a supply? In the medical industry, this can be a very, distinct component of how they're approaching they're able to approach to remain on, for example, cash basis, or they would need to be on accrual basis. So it's you just look, it's very fact specific that everything I look to. As I said, I go back to my jigsaw puzzle pieces.
Right.
Together.
Right, which sounds exactly like what you're doing. And that basically answered my next question, which was what are some of the problems and issues you help your clients address? And you really just did outline some specific cases of what's going on there.
Yeah,
so
tax minimization, yeah.
Yeah, so I think that I'll go to the next question because you've really answered that one. And this one says, this one we want to focus in on sort of your philosophy. Would you say you're more a conservative or more aggressive type accountant? Or
I let my clients decide. I put myself in their shoes, and I think I would want to be fully informed. I've worked with some practices where they say, well, we're known for being aggressive, so the client must just assume this when they come to us. I don't think that's right. I think if you're going to give someone an aggressive tax planning strategy, which is fine, I'm not condemning it in any way, as long as it's substantiated, I think the client should be informed, and they should be the ones that make the decision. I have worked with very conservative clients, and I would never present, a strategy that isn't completely, I's dotted and T's crossed to them. I would tell them perhaps of alternatives. I would tell them that there may be some risk factor, and I let them decide though. And I work with clients that are do we have a substantial basis to take this position? And they're more aggressive, and they're comfortable with saying, we do have some risk here. If you're audited, it's possible we'll be, certainly we have a basis to argue that it'll be, but I can't guarantee it. I can't give you necessarily a should level of opinion, and they're totally fine with it. So, yeah.
Perfect. So that leads into our next question, which is, what is your experience dealing with the IRS, and can you represent your client if they are audited?
I've done lots of audits, going all the way into tax court, and to various appeals levels. I've done it both as an accountant, as an attorney, and you can never guarantee results because they're fact-driven, but especially in tax court, I've had extremely good results for my clients. I'm tenacious, and I, figure it's like, treat it like it's my money, and do the best that I can.
Well, can't ask for more than that. That sounds like an appropriate way to have your advisor help you. And how do you deal with a client who has multiple entities? It sounds like you have several clients.
Yeah, I mean, I clearly multiple, multinationals in terms of multiple entities across countries, and multiple individuals that may be, present in more than one country. Again, you have to look at all the laws that apply and how they all fit together. I will not, I have an awareness and sensitivity to the laws of a number of countries, because I've had years of experience of working with them. So I know hot buttons, but I will never put myself in the position of saying I'm advising you on that country's taxes. I will always revert to, I belong to an affiliated organization where we have, where we could call on someone from another country, or I let the client choose their advisor, but I definitely will not give dispositive advice for the laws of another country. I think that's overstepping my bounds.
Right.
Advise, I will say this, I think this will happen in Canada. For example, Canada has a capital gains tax on death. We have an estate tax. Other countries have an inheritance tax. I know how it works, but I will still tell them when we're doing, for example, a multinational individual who has Canadian presence, I will pull in a Canadian advisor and have them advise as to the Canadian side. Although, I do have a pretty decent framework. I will not have someone, rely on my advice.
Well, that sounds like a good approach to that situation. Now, do you provide updating, reviews, and maintenance programs for your clients?
And I don't provide software to my clients. I will provide, updates in terms of changes in tax law, opportunities in tax. I believe I've mentioned some of them. This is on the, trust or estate planning side. Like, for example, I've been advising clients this year to do charitable lead trusts and grants. They're very, because of low interest rates, again, this ties into transfer planning, but because of the very, very low interest rates, now I have found charitable lead trust to have an enormous benefit, upfront benefit. For example, let's assume you're doing a transaction. You might have a great deal of income in the current year, and you may be charitably inclined. With a charitable lead trust, you get the present value of your future deductions, okay, if it's a grant or charitable lead trust in the current year. So you accelerate, but because the interest rates are so low, you're going to get a very, almost complete component of these future payments that you can deduct today. Now, and then the residue, it goes back to you. The residue of what you put in a charitable lead trust can go back to you, can go back to your children, grandchildren, whoever. But the key component is that, unlike a foundation where people say, oh, you're going to have this transaction, put your money in a foundation, you get money back at the end.
That sounds like a good approach also. Wow.
It's a little more, it's financially a little more sound than necessarily saying, let's just take that current deduction and put it in a foundation. You're still going to have compliance going both ways. With a charitable lead trust, certainly you don't need to have IRS exemption. But you will have on the split interest trust, they'll still be reporting annually. But I have found it to be a much more powerful mechanism in the current year with the incredibly low interest rate environment. Similarly with grants, incredibly low interest rate environments are helping reach that threshold that makes grants work extremely well. So Concerns about grants going away should there be a change in administration, but so it's even a bigger incentive to potentially look at longer term grads at this point. Yeah.
Exactly. That's exactly what we're encouraging people to take action in this quarter before things change, and or whatever is coming up next. And of course, to take advantage of these low interest rates. And in terms of insurance strategies, you can use premium financing, taking
Correct.
advantage of these
Loans
low
are
interest
extremely
rates. And
low. Yeah.
it makes a lot of sense, right?
Yeah.
So now, when you're working with a client, how do you work with them initially and then in the long run? Is there a difference over time, or how does that work with you?
I probably put in more time up front because I need to get to know them. I need to know all the, nuances of their personal situation. And then and then you kind of, grow from there together. So, I retain the knowledge of the previous year clearly, and the history and the nuances, and we roll that forward. And,
That sounds appropriate.
opportunities that, come into play in a given year. Obviously this year, if there's going to be a change in administration, we're going to be doing a lot with clients, planning wise. And I think a lot of attorneys will be very busy by
Absolutely.
this year end. So, yeah.
Hmm. How do you determine your fees, and what would they include?
Um, I bill hourly mostly, and at very, I would consider reasonable rate, very reasonable rates. Or if it's just reporting like compliance, some clients really want to know, have it. So I quote it. I'll give them an estimate as to, or a particular project. They would want an estimate. I'll give it to them. So.
Right. Okay. What are some of the experience in mitigating or dealing with estate taxes and other types of taxes that you've had?
I think I've mentioned a few already.
Yes.
Certainly in the multinational space, there are tremendous, opportunities and pitfalls, depending on how you structure. Structuring, inbound structuring is extremely important, because you can completely avoid estate and gift tax exposure in the right
Mhm.
circumstances. I've done that all the way to, expatriates. How do we structure their affairs to minimize their situation where they're looking to expatriate in a certain period of time? How do we reduce the gain, the hidden gain, that they would wind up paying taxes on earlier on if they're looking at expatriating, in the future? As I said, we've also done charitable lead trusts quite a bit this year, grants this year, intentionally defective grantor trusts. Defined benefit plans can have a huge, qualified comp plans can have a huge benefit. I have a client, for example, whose business is in Costa Rica, and it's a BVI, check the box LTD. So you report it for U.S. purposes as a partnership. And, but a very simple thing, but it has a huge difference in his situation, where he and his wife are the only U.S. taxpayers. So knowing that it's flow through income, so it's subject to self-employment tax, it's eligible income for a qualified comp plan. So what did we do? They're the only two that in his company, he doesn't have to cover anyone else under our rules. We gave him a defined benefit plan. We gave him 401k plan. We gave him a profit sharing plan. And among those three things, he and his wife currently are putting away over $700,000. So that's the savings that he doesn't have to pay taxes on. It's going to grow tax deferred, creditor sheltered, which is also a benefit for him, an issue for him. It's very secure for his retirement. And we're putting the maximum amounts away each year, and it's I think $2,000 a year are the costs to maintain. So not much. In terms of the tax savings, a huge win. Other things, very simple. R&D credit. You'd be surprised how many places that can be a benefit. With bonus depreciation at 100% and under the 17 Tax Act, used property also eligible. Cost segregation studies have a huge bang for their buck, because you can, it's not a matter of changing your accounting method, but you can completely write off improvements as of this year. That was fine. The debt scrivener's error from the 17 Tax Act was finally fixed. So land improvement, leasehold improvement, you can get a complete write-off on that. And anything that's broken out as personal property under bonus depreciation, a complete write-off. It's a large savings on the federal side that you can get. I have some clients in the tech space. Obviously, I bring R&D credit is very liberally construed, and we've brought some very significant tax savings. In fact, I have one client. This is the first year we did R&D. His total tax bill this year was $900. So all the rest of his income has been shielded by R&D credit. Yeah, he wound up getting a very sizable refund.
So my next question was, how often do you communicate with your clients about tax issues? And it sounds like that's something you do very actively.
Yes, quite regularly. The larger and the more complex the client situation is, the more I'll get involved with. More regularly we speak. So my cell phone, my clients have that number. I'm always available, and I've had calls late at night, 2 a.m. Especially for Asia, or very early morning with Europe. It all works, and I do. And I'm happy to help my clients.
Are there any other services that you provide or issues that you address that we haven't covered already? It sounds like you've covered a lot, but is there anything else you'd like to add in?
I mean, I do. As I said, anything that is tax centric or business advisory, we look at, and if it's something that I personally don't do, I don't do audit, for example, audit work, I will get the proper party involved.
Right, that makes sense as well. What are your tax philosophies and tax planning priorities? And will those philosophies and planning priorities result in maximizing tax savings?
I hope so. I look for every building block, every opportunity that's there. A lot of people think, oh, I'll do this, very large, on a very large scale. If I do something, like a Maltese pension plan, which is, very risky, but let me do this and it'll save me all this money. But a lot of times it's also a confluence of a lot of small things that you can do. And those, I think, are very often overlooked. I mean, I will bring to bear the large, the low-hanging fruit, the very large ideas. And a lot of times it's structure, how do we structure the businesses? Do we want, for example, a separate management company where we can flow through and get the benefit of, in an S-corp structure, but not necessarily impair long-term the underlying assets if we want to move them around, so we have flexibility. What is your accounting method? How are you accounting for your inventory? How can we break out those costs? So it's a wide range. As I said, I try to be cohesive when I look at that, and then I also look at their trust and estate planning. What do you plan to do with your wealth? How do you plan to pass it on? I've had clients come to me later, and they might be in their 70s, and suddenly they haven't done any tax planning, and suddenly they're not in great health. So what do we do? So it's what I've done. I know for one of my clients, they had an S corporation. So what we did was we put them into for tax planning, for trust and estate planning, put them into a preferred interest partnership. Uh-huh. The discounting was phenomenal that we were able to do. But the best part is that on death with an S corp, you don't get a step up on the underlying assets. There's no 754 election that applies with an S corp. And this was like an S corp that went back to the 1960s and 70s. It started off as a C and then became S. And all the interests were actually held because it was 1031 and reinvested over decades in an S corp. How do we get that out? You will be able to get some of it out using this mechanism, so the next generation actually does wind up with a partnership interest. But I try to be creative. We try to use the best strategies that are available, and within the parameters of what's allowable.
Well, that sounds very appropriate for the situation you just described, and a good solution for those people. Now, what can your clients do to help you with your work to keep fees down?
It's how they give me the information. The more information they give me, and the better it's presented. Um, and to give it to me, that I don't have to follow up with 2 or 3 emails. That of course, just efficiency in terms of communication. I try to be efficient. Like when I'll send an email, I will make it as user friendly as possible, and I will, if I'm referencing something, I will attach it, so they don't have to go fishing through 25 other emails. I'd like to send one message that is complete and comprehensive. So it's efficient for them. So it works both ways.
Okay. What types of creative tax and business planning advice do you offer? I think you've already given us some examples. Any additional ones that you might want to also share beyond that?
I mean, there's a lot that can be done with structure, upfront structure before you get into forming a business. There's a lot that can be done when you're disposing of a business, how you're going to dispose of it. Even on sales transactions, you may have a letter of intent that tells you something, but then when I get involved, for example, in the actual disposition, in the actual agreements, which I do review and I go through and I advocate for the clients. One that I've actually encountered a couple of times as an initial draft in these, which clients aren't aware of. When you're selling a business, let's assume it's in a partnership form. Usually you have a very low basis and there's a lot of value. So there's that big difference between tax basis and then and value. If you are, for example, going to be in a situation where we're going to continue with the business, okay, which I've had in both of these situations, the buyer, for example, is allowed an inside basis step up under 754 if it's a partnership. The seller, on the other hand, is going to wind up with an allocation when they're continuing on the differential between their low basis and the value that they had on sale when they're continuing the business. I have seen this is just one example. I've seen in these agreements, in the initial drafts, where the initial offering was to say that we guarantee tax distributions, but they will ignore 754 and the 704C. So what happens is that the tax distributions will ignore the step up, which gives more expenses to the buyer. So the buyer will get a tax distribution in excess of taxable income. And for the seller, who's getting more taxable income because they have this differential to account for, they will be getting less than the amount of taxable income, which could leave them bootstrapped for cash. So, I obviously take those out. Guarantees, warranties, how they're guarantees in representations, how they're made in the agreement, very important. They could be very, very broad, and they'll come back to you for money after, later on. So, I go through these agreements very carefully, and I advocate for the clients, or I'll go back to their attorneys and discuss it with them. So, there's at every level, there's something that can be done. And we definitely always look for those opportunities and savings and pitfalls.
Right. As you have discussed with myself and my partners, we have a strategy for those business succession planning situations as well. Exactly. That can take care of some of those kind of issues that you were just addressing that could be more Exactly. effective in the long run if they have a significant time frame of at least 10 years would be ideal, but 5 possible could still maybe be done. So those are worth discussing, of course. Yes. Now, in terms of the way you do your practice, if you're not available, is there someone else you work with that can step in?
Yes, I have an associate partner. Yes.
So that they're aware of what your clients' needs are, and they could always be available if they need them, right?
I have backup.
Yeah, I have to have it in these times or any times.
Oh God, yes, especially these times.
Exactly. And sort of our last but a little different question is, what can you tell us about yourself that we cannot find out on the internet?
I I'm not the other Magda Szabo. There was an author who wrote a famous book. So I'm not that one. Then I discovered there's a Canadian artist with the exact same name. I'm also not that person. So don't get me confused with the other Magda Szabos on the internet.
I know, right. Well, we did learn that you have 4 children. Is there any special interests or other things beyond your professional and family interests that you might share with us that we
Well,
also...
my house and my home and my children are, my children obviously the most important thing. I have 2 dogs as pets, in part of the family as well, and I love to work outdoors, just because I spend so much time indoors. I love to be in the opposite. I run, I jog, love to be outdoors. I love to plant and grow things. Yeah.
Well, that's nice. Well, thank you for sharing those with us. So Magda, this was great. We learned a lot about you and your practice and your concepts and ideas. Could you tell our audience what the best way to reach you would be?
Well, these days my cell,
Okay.
which is 216-403-1325. And then my work email address, which is my first initial and my last name, MSZABO @cscpallc.com. And we're in New York City.
That's terrific. Well, as I pointed out, I wanted to share with everyone a little bit about the importance at this point in time, since we're now reaching the 4th quarter, we're in the 4th quarter, the year is coming to an end. It's an important point in time to look at any insurance you currently have, more so than ever because of the changes in interest rates, the low interest rate environment, as well as the impact that is having on insurance companies. So existing products or future products you're considering need to be explored carefully. So me and my firm are offering a fiduciary review, and you could contact me at ella@nortonadvisorygroup.com, and we can set up a virtual appointment and review your insurance strategies and what you currently hold and see what makes sense under these current circumstances. Also, you can easily now know how to reach Magda, and you can look at my website. I'm going to post this interview on LinkedIn and maybe other places as well. And I'm hoping you will join me for the next session of 20 for 20 in 2020. And in the meantime, I'd like you to all stay healthy. And of course, in our current environment, don't forget, get out there and vote. And thank you again, Magda, for joining us today.
Thank you for having me.
It was my pleasure. And everybody stay well.
Yes.